Ladies and gentlemen, good day and welcome to Tech India Limited Q2FY26 Earnings Conference Call. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference call is being recorded. I now hand the conference over to Ms. Sanghamitra Borgohain, Managing Director for Tech India Limited. Thank you and over to you, ma'am.
Thank you so much. Good afternoon, everyone. I am delighted to welcome you all to Tech India earnings call for the second quarter and the first half of the financial year 26. Joining me today, I have Mr. Dilip Kohli, our Chief Financial Officer, Mr. Sunil Khorawat, Chief Business Officer, Mr. Ashish Goel, Company Secretary and Compliance Officer, and our Investor Relations Partner from Sector PR. We will take you through our business performance, key developments, and outlook for the coming quarters. At Tech, we continue to build on our vision to creating sustainable, innovative, and community-centric infrastructure solutions. Our focus on creative parks, geotechnical solutions, and water management technologies continue to drive consistent growth and operational efficiency. Our focus on sustainable design, technological differentiation, and precise execution continues to guide our approach as we expand in urban infrastructure, specialized construction, and environmental solutions. In the habitat segment, that is the sustainable theme park, ongoing urban parks and experiential projects have advanced according to the plan, with several key milestones achieved in this quarter. These projects continue to reinforce our commitment to creating urban spaces that are both functional and culturally enriching. And with the aqua vertical, the guides enable wastewater recovery and treatment solutions are continuously receiving inquiries from strong potential customers for treatment of their difficult water. Our geotechnical vertical also delivered strong execution performances in Q2, with progress across soil stabilization, reinforced earth walls, and slope protection projects in complex terrain corridors. These assignments demonstrate our growing expertise in geotechnical engineering and precision-led infrastructure delivery. Looking at the order pipeline, we continue to see a strong inflows across highways, public utilities, and urban development segments, with several new projects in advanced bidding or pre-development stages. Our balance sheet remains healthy with prudent leverage, well-managed working capital, and sufficient liquidity to support the growth initiatives. Before I hand over to Mr. Sunil Khorawat for detailed operational and financial insight, I would like to thank our clients, partners, and shareholders for their continued confidence in Tech India. We remain committed to executing with excellence, leveraging technology, and delivering long-term value. So I will request Mr. Khorawat to take off from here. Thank you.
Thank you, Sanghamitra, and good afternoon, everyone. Pleasure to connect with all of you for our Q2FY26 earnings call. It is always a pleasure and very happy to report that we have maintained our strong execution discipline. Our focus on timely delivery, quality, and stakeholder engagement continues to drive performance. While it is well known that this time India has experienced significant rains and probably ongoing issues around water issues in different parts of India, but we have tried to continue to build our momentum in our vertical regarding urban-centric parks. We have been executing urban park projects and other experiential assets which are advancing well in terms of the design, fabrication, and on-site execution. These projects are expected to emerge as a significant landmark in times to come, and the key value drivers in the urban and semi-urban development ecosystem. As I had mentioned in our earlier calls that we have been trying to rebrand our Spark initiative under a brand called Zinc Park. And Zinc Park is gradually gaining recognition as a differentiated experiential entertainment vertical. While this remains a long-term value creation initiative, early market response, what we see is very encouraging and strengthens our visibility in the leisure and experiential segment. I am also very pleased to share a landmark development that when we inaugurated our fifth thematic park, which is called Anokhi Dunya, in English it will mean unique world, which is located in a tier 3 town in Uttar Pradesh, a place called Khurja, which many of you might know as the ceramic pottery capital of the world. And this park is unique and it's world's first to be constructed entirely from the ceramic waste, aligning with the government of Uttar Pradesh One District, One Product initiative that promotes local craftsmanship and sustainable tourism. In a pioneering step towards the circular economy, we have artistically repurposed discarded ceramic materials, including tiles, potteries, remnants, and production waste from the various local manufacturing units, and created this entire park. It has been gaining traction, and as and when probably more and more knowledge about this park is getting spread. Also, the park is slated to win several international awards as well. And this stands as our powerful testament to commitment towards sustainable innovation and creative design. As of September 2025, as a company, we have developed around 18 creative parks, and there are another 35 plus upcoming creative parks, in a different stages of evolution. Our current total order book remains around close to 200 crores. We expect that by end of FY26, we should be having 15 to 20 parks operational, and aim to reach with our earlier stated visions of around 100 creative parks in next 3 years. Just to give you a context, previous year, in a whole year, we made around, from beginning till end, we executed 2 parks, and this year, the aim is to build another 15 plus parks, So we have built our capabilities to move from 2 parks in a year to around 15-20 parks in a year. I expect that we will be able to bring this execution and operational capability to 30-40 parks every year going forward. These all parks are designed as a bespoke community integrated project spanning whether it's a spiritual, heritage, scientific, wellness themes or entertainment themes under the public-private partnership model, keeping ticket price very affordable for all sections of society. And we are witnessing the footfalls on the expected lines. Recurring revenues from ticketing, F&B events, retail spaces are expected to contribute approximate 30% revenue by the time in FY27 and 40% plus in the medium term. In our Agua vertical, we also see significant progress going forward, where we have delivered some very unique systems using our proprietary technology to provide chemical recovery solutions for clients like Graphene, Gujarat Alkalis, Navin Fluoride, where we are turning waste into a resource while supporting environmental sustainability. To strengthen this business further, as we believe that this is a business which has a significant upside potential, and we also realize that we need to be very close to our customers. We have relocated our operations from Goa to Vadodara in the last quarter, the heart of India's chemical belt, where our new laboratory and R&D facility have become operational. This move will give us access to a larger talent pool and also will bring us closer proximity to key customers, enabling, faster execution and innovation. Para vertical, which is the specialized civil engineering based on geosynthetic application, which is our legacy business, continues to deliver steady execution across various active project sites involving highways, rail corridors, and complex terrain engineering. Interesting aspect of how the business is evolving, that we have been able to crack into some new markets as, mining stabilization, which will bring in significant revenues, going forward. We have also been working on a very unique project about, creating structures in the desert area, and we are expecting some significant movement in this quarter around that. The order book visibility remains strong, supported by partnerships with marquee EPC players as Tata Projects, ITD, J. Kumar, Adani, SP Singla. We also secured in August 25 a new work order worth almost 17 crores from EKK Infrastructure for a key 4-laning project in Tamil Nadu. And this helps in terms of strengthening our position in the southern market. Let me now walk you through our financial performance for the second quarter and half year ended 30th September 2025. Our total income in Q2 FY26 was around 34.5 crores as against 19.04 crore in Q2 FY25, giving a significant growth of 81%, YOY. Similarly, EBITDA, was 7.01 crores in Q2 FY26 against 3.84 crores in Q2 of FY 2025. The profit after tax, stands at around 6.06 crores in Q2 FY26 against 3 crores in Q2 FY25, almost giving us 100%, growth, or more than 100% growth in terms of our PAT. When I look at the H1, the first half year results, our total income in first half year was around 55 crores against 35 odd crores in first half of FY25, resulting in a growth of close to 56%. This growth was mainly driven by our sustainable theme park business. EBITDA excluding other income was around 12 crores in FY26 H1 against 7.2 crores, giving a YOY growth of 66.7%. PAT, profit after tax at 9.1 crore in H1 FY26 against 5.4 crores in H1 FY25, giving us a YOY growth of over 70%. Our current order book stands at approximately 200 odd crores, out of which 80 odd crore relates to creative parks and remaining to the geotechnical and water projects. This strong visibility will continue to support revenue growth in the coming quarters. We continue to manage our working capital efficiently as per the norms of the government-related businesses, allowing us to invest in new projects without compromising liquidity. While some might find a little bit of a stretch in terms of the working capital nuances, but we find that, we have been able to keep almost 85-90% of our, receivables are below 90 days. Our project pipeline stands at 30 to 35 additional parks at various stages of bidding for finalization. Partnership with event organizers, adventure operators, and F&B brands are underway to enhance park monetization. For example, the most premium brand of Lucknow called Royal Cafe is moving into UP Darshan Park with a sizable investment. With their investment and their ability to draw footfall, not only increases the UP Darshan Park as a landmark project, but also adds significant to our bottom line. We are also expanding beyond North India into Maharashtra, Gujarat, Bihar. Those three states which we have already broken into. Telangana is something which we are expecting to probably get in very short period of time. This will help us reduce the seasonality risk and broadening our national footprint. We also are planning to explore a strategic demerger of wind parks, as I mentioned earlier, and infrastructure water business to unlock shareholder value and provide sharper business focus over the medium term now. We believe that India is at the cusp of a major shift in public recreation and sustainable infrastructure. With our first mover advantage in creative parks, the category which has in fact been started by us, our integrated design capabilities and our strong public-private partnership model, ZTech is very uniquely positioned to lead this transformation in India. We continue to explore inorganic opportunities that can complement and strengthen our existing verticals. In particular, we are evaluating potential acquisitions that bring innovative technologies in the area of water body rejuvenation and environment sustainability, which could enhance the capabilities of our Agua division. In our current, 5 parks which we are currently operating, almost 4 parks have some water body in those parks. We feel that water body rejuvenation is a significant area of growth opportunities, and we are trying to add necessary heft and technology in that space. We are also looking at opportunities that align with our growth strategy of our creative parks business, where design, technology, and sustainability converge. We expect FY26 to be a milestone year marked by 70% plus revenue growth, geographical expansion, rising recurring income, and growing brand visibility across cities. Beyond FY26, we see further acceleration as the annuity revenue base scales up and operational leverage kicks in from our expanding park portfolio. Again, as I mentioned earlier, that what we used to operate 4 parks in last year, our goal is to operate 15 to 20 parks by end of FY26, which increases our significant visibility on the operation side and continues to then build a recurring revenue streams. We expect FY27 to mark a significant inflection point when the annuity income from our 25-30 operational parks starts meaningfully contributing to both revenue stability and cash flow. We are giving a very significant push towards opening more parks this year, so that will start giving us the recurring revenue streams from FY27 onwards. Going forward, our near-term focus is on deepening execution excellence, accelerating pre-development, on awarded projects, and selectively expanding into existing markets. We continue to invest in R&D, digital practices, and in-house engineering capabilities to enhance delivery speed, quality, and sustainability. To conclude, Q2 and H1 FY26 reinforce ZTech's position as a unique and innovative infrastructure company blending sustainability, creativity, and scalability, something which has never been tried before. With this kind of an integrated approach to sustainability and to create outside arena, we have built a unique, robust order book, expanding park portfolio, strong execution team, and we are very well on track to deliver growth and value creation for all our stakeholders. I would also like to thank our shareholders, government partners, employees, and customers for their continued trust and support. We remain highly confident that ZTech India is poised to emerge as the pioneer and market leader in India's sustainable creative park segment and truly ensure that the joy is for everyone. Everyone deserves to be probably out, and which helps in their happiness and health quotient. Thank you so much for listening to us, and we are now open for the questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Priyanshu Jain from Growth X Infinity. Please proceed.
Hello, am I audible?
Yes, you are.
Hi, sir. Congratulations on good set of results. I have few questions. So first is on the order book side. As you mentioned, like 80 crores is for the creative parks. So like going forward, like I think in the last con call, you mentioned that 6 months is the timeline in which we like deliver the projects. Am I right?
Absolutely.
Like, can you also tell us the reason as you also mentioned like 18 months is the time frame which we take. So, like, how we are able to like deliver in such a less time as well?
18 months? Sorry, I didn't get your point about 18 months.
So, like, I think timeline for execution of orders is around 18 months, right?
No, it is for the geotech business. For the theme park business, we usually take around 6 months.
Okay. And sir, like, for the rest of the year, like, out of 200 crores order book, so, like, what will be the further, like, pipeline for the orders?
There is a significant. So first of all, a small correction. I made a mistake that 80 crore is the order book of geotechnical business. The theme park total order is around 113 crores. So small correction there. So as we speak right now, our pipeline remains very, very healthy. So just to give you an idea, as far as the theme park business is concerned, we have almost like around 173 crores orders, which are going to get finalized in next, let's say, within 3 months. Apart from that, I have another 13 orders which are at a different stages, which I feel out of that almost 50 odd crores worth of orders should get finalized by another 3 months time, so which means Q4. So if I add these two together, almost we expect to finalize order worth 200 plus crores for the theme park business in next, by March. Similarly, I feel in the geotech business, we should be, we are looking at some significant expansion into new areas, which I mentioned in my earlier conversation, that we are getting into some unique orders regarding mining stabilization and also for sand dunes. I expect in geotech we should be add another 100 plus crores worth of orders in next 4 to 5 months. And so if you add all these together, by next 5 months we should be adding orders close to almost conservatively 300 plus crores.
That's great, sir. So the fundraise which we are going to do is for this expansion only, I think so.
Which fundraise?
Sir, 100 crores as like mentioned, no? Like.
It has already happened, no?
Oh, okay. Sorry, my fault. And so, like, just last question on the product mix. So, like, going forward, what kind of a product mix we are expecting?
I feel that, our theme park business will contribute around 65% business, and the infra business, specialized geotech and water should contribute around anywhere between 30 to 35%.
Okay, 30 to 35% from the water business, right?
No, water and geotech business, because both are
combined. Yeah. Okay. That's all from my side. All the best for the future. Thank you, sir.
Thank you.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to 3 per participant. The next question is from the line of Tej from Nivishai. Please proceed.
Hello, am I audible?
Yes.
Thank you so much for the opportunity and congratulations on a good set of numbers. First of all, sir, I have a very basic doubt in terms of presentation. So if I look at our presentation, our delivered order in the industrial wastewater segment is showing about 23.53 crores. And
Mm-hmm.
if I compare it with the same last year, it's about 16 crores, I guess, in the last quarter's presentation. So, I mean, the differential is quite high, I mean, which shows execution, right? I'm just trying to understand where are these numbers going on, because our revenue for this quarter is not also 1 crore also, but, the difference is of more than 5 crores.
Mm, Koliji, if you can probably, I don't have the split with me on the water right now. So we will
Okay.
revert to you with a clarification on that, if that's okay with you. I mean, the way
Okay,
I see it right now, the wastewater last year till H1, we did was, 3.75 crores, right?
So, yeah. So I was talking about at the end of the Q1 FY26, the presentation which you uploaded had the delivered projects of about 14 crores. And when I open this
No,
quarter's, yeah, sorry.
14 crore is the life cycle project. So I
Okay.
need to again probably get into it to know exactly if there is any discrepancy.
Got it. No, not a problem, sir. And sir, if you could just help me understand from March to up till now, how many orders in the park business have we won and the value of it?
So between April to September, we have won around 13 orders on the park business. The
Okay.
value is close to almost 100 plus crores.
Okay. Got it. And second is a question in terms of the margins for the park business. I mean, it was about 40+% in the last to last quarter. It dropped to 35%. Now it's again back to 25%. What is driving this, decrease in margin for park business?
If you really look at it, apple to apple comparison, it is not, decreasing. So when you look at the last year numbers, last
Yes.
year in the first half, we had two big openings of parks. And when a park opens, probably initially for 6 months, it has bumper revenues, like in any park. Now, this year, so far, we haven't opened any park in the first half of the year. So that is why it is not giving you apple to apple comparison.
Okay. So then in that case, how much would be the revenue coming from EPC in this quarter?
EPC in this quarter, I will tell you, the revenue would be almost like, 28.7 crores,
28.7. Okay. Got it. Perfect. And sir, if you could just help me, with an understanding of what's the status of the Noida park. I think the park is already ready, but I think it's still not.
I know it is also little bit, it disturbs us also. The park is ready now for, quite some time. It was supposed to open in September, and then the thing is that they want, Honorable Chief Minister Yogi Ji to probably inaugurate. And then subsequently the Bihar election got announced. As I have been told that hopefully they will announce the date between today and tomorrow about when it is going to be open, because that also has affected our little bit of our past revenue as we were anticipating. Right. But then, this is the part and parcel of working in a public-private partnership model where we have to look at their side as well.
So do we expect it to be operational,
Sorry to
let's
interrupt,
say...
Mr. Tej. May we request you to join the question?
Let me complete this question and I will join back, no problem. Sir, do we expect this to get completed, let's say, the opening to get completed by, let's say, end of December? Do we expect the last quarter to be
by end of
operational for this
November
part?
itself, by end of November.
Okay, sir, I have further question. I will join back in the queue. Thank you.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to answer questions from all participants in the conference, please limit your questions to 3 per participant. The next question is from the line of Darshil Zaveri from Crown Capital. Please proceed.
Hello. Good evening, team. Thank you so much for taking my question. Hopefully, I'm audible.
So,
Hello.
you are. Yes,
Yeah.
yes.
Hi, sir. Yes. Hi, sir. So, sir, just a bit, some of my questions have been answered, but just wanted some clarification. So when we say that, our order book is around 113 crores for the park, so that we'll completely execute by the end of the financial year, right? So, is that a fair assumption?
Not entirety, because
Okay.
out of that 113 crores, 2 orders are which is long-term maintenance contract. That gets OT over a period of time. So to be precise, if you take those 2 orders out of the 113 crores, then probably 31, 39 crores. So around 35 odd crores will not get executed completely this year. Rest all will get executed. So around 80 crores out of this 113 crores will get executed by this year end.
Oh, okay. Fair enough, sir. And this is just the EPC part of it, right? So from the ticketing, what are we expecting? Like, so 80 crores from our, execution, and from ticketing, what kind of, H2, I'm assuming, more festive, and, we are planning to open up parks also. So how do we see that once the Noida boost comes, like, so how do we forecast this, sir?
It is a kind of a little difficult for me to give a, let's say more of a perfect answer to start with on this. The reason being is, prime example is the Noida opening. Now park is ready to be opened almost like more than 1.5 months, and it just got delayed because of a formal opening by the chief minister. Now I can tell you that in the month of November we have 3 parks which are ready to open. In Noida, we have Moradabad, we have Pune, and these 3 parks should open in November. Then in January, I will have another 3 parks which are ready to open. Now they all have a different traction of revenue as they come along. As I have been mentioning earlier, as I see, and we are also learning, getting nuances around the operational metrics, I expect that whatever is our park revenue, total park revenue business is, around 20% at least in this year should come from the non-EPC. 80% will still continue from the EPC at least in this year. This will change year after year in the favor of more of the operational revenue as a larger base of operational parks become ready now.
Oh, okay. Fair enough, sir. And so just wanted to, get a sense for FY27. So, like, what amount of parks, where we are having, share of ticketing will be, operational for the full year in FY27? And with that, like, what kind of growth are we looking there? Because I understand FY26, we are, maybe more in the development phase where, our parks are opening, but FY27, we'll have a decent chunk of parks open for a longer period of time with F&B also.
I agree. So, in FY27 at a full year operation level, I expect the minimum 15 parks will be operational. Now, with that 15 parks operational, I expect that somewhere around 35 crores might be 30 to 40 crores revenue will be coming out of tickets and other revenue streams. See, we are still trying to activate more events and other things into the park. We have also did several of them this year for the first time to figure out what works, what doesn't work. And I feel by the end of this financial year, we will have a very good understanding in terms of what kind of a event activations park can have. We will have a far better understanding in terms of the F&B arenas and the kids activities and all. And I expect that FY27 with this bouquet of 15 plus parks, we should be able to generate at least 30-40 crores, if not significantly more. I'm just trying to be very conservative because I like be conservative, promise less, deliver more.
Fair enough, sir. And just last question from my end. So what will be a sustainable margin? Because, Q on Q, we have seen some decline with, even if the revenues have increased, like from Q1 to Q2, we've seen a decline in margin. So what will be our sustainable margin that you can see, sir?
I feel that, our margin at the PAT level, 20 odd percent is sustainable. What is happening is, as we are, scaling up our operations for park operations business, we are building up some of these costs right now so that we are able to leverage it as and when we have the 15 parks operational. As I mentioned earlier, that we are also, created this whole Wing Park initiative. We are adding significant manpower both for our events and marketing team for the revenue maximization. So some of those will start giving, the real impact will start coming once we have a full year of operations.
Okay, so we said 20% for PAT, right?
Yes.
Okay, fair enough. I have more questions, but I'll get back in the line, sir. Thank you so much.
Thank you.
Thank you. The next question is from the line of Ravi Naredi from Naredi Investments. Please proceed.
Thank you. Give the opportunity. Sir, reduction of promoter equity from 60.75% to 53.15%.
How much?
Reduction of equity 60.75% of promoter to 53.
65.
Yeah, 60.75.
60.75. Yes.
To 53.18 in 9 months. What is the reason?
The reason is that we are seeing significant growth opportunities. We can raise money in the previous, I think, around 6 months back. That's the only reason why I can contribute to. Today the company is well capitalized for looking at this kind of a hyper growth initiative that we are taking on.
But promoter has not sold any share?
Very few, probably might have sold a percentage or two, but, beyond that, no. We haven't.
Okay. And sir, why we do a small project even worth of less than 1 crore? How we get benefit return from them? You have took 17 crore road project in South India. South India is far away from you. How you manage all this?
Sir, first of all, we have 3 business divisions. All 3 business divisions are managed independently. Now, as far as the South business and JetTech, Geotech division has been a national player in a specialized civil engineering sector, and we have been doing projects across India. We have been having teams for a very long period of time. So we don't see that as a challenge, to answer your question about the southern region. As far as the, the creative side of this thing is concerned, I feel that, spreading the knowledge about public art and creating some spaces in small cities is very important to see them for a larger part, first of all. So we believe that, people at all levels must experience what we are trying to do, number one. Number two, even if we are doing those smaller projects, we still probably get much higher margin in those projects. So it doesn't bother me much, but it also does spread out the knowledge about waste to art across the country now. So the third thing which is important is many of these works come to us from a reference point of view. We don't necessarily go and chase them. People, let's say, who have been in the city, they have liked our work, they got promoted as the district collector or the district magistrate of a smaller district town, and they call us that, why don't you do something for this small city town also? Because of our existing relationships and because we get margin and because we believe everyone has right to experience, we do it.
Thank you.
And today, you'll be happy to know that JetTech is the largest employer of artists and artisans in the country. we have created, a value for the company as well as livelihood for large number of underserved community in this country now. So I feel good in terms of doing everything which helps promote the waste to art as a concept.
Thank you. The next question is from the line of Manhar Rao from Orbit Capital. Please proceed.
Yeah, hi sir, good evening.
Good
We
evening.
had a target initially of 20-25 parks in this year. 6 we have completed, UP Darshan, Harmony, Khurja, Noida, Happiness, Shivalay. 9 are in pipeline, World, Bollywood, Satyajug, Khilmil, Vishwa Ekta, Bihar Gaurav, World Park, Ahmedabad, Sanskriti, Ghaziabad and Fulkari, Firozabad. So 9 plus 6 is 15, sir. And as mentioned by you in the call, it takes about 6 months to execute a particular park. So could you just let me know which are these 5 parks we are expecting, quantum of size, because if we don't win them in the next 15-20 days, I think we'll be short of 20-25 parks execution, which we had a plan initially at the beginning of the year.
So, thanks for your question. The parks which are currently under construction is 1, 2, 3, around 10 different parks. 5 we have done, 15. And, the parks which are total under construction right now is 13. And 13 will include Khurja, so 13 plus 4, which we have done in the past, makes it 17. And these parks are, 2 parks in Pimpri Chinchwad, Muradabad, Gandhinagar, Auraiya, Jammu, Patna, 2 in Firozabad, 1 in Shahjahanpur, 1 in Ghaziabad, 1 is a Bikaner small project, and 1 the Khurja, which has already been started. Apart from that, there are various, almost 16 more projects which, are under some stages of tendering. In 2 parks where the tenders are already out, because they did not get enough bid, it probably got re-tendered, and it has, that's how the government processes. There is nothing which I can do about that. Out of these 16 different projects, I feel that we should be able to do at least 3-4 of them, in next 4-5 months time. And when I said 6 months, I was not saying that every park requires 6 months. Shivalaya Park, which had to be inaugurated by Honorable Prime Minister, and because we knew that this is going to be high profile, we finished it in 4 months time. And we feel there are several projects which we are looking at, which we will be able to finish it in a relatively short period of time with the kind of a experience working which we have got now.
And so my second question is, could you please tell the ticketing and EPC split for this quarter? And also, do you think, sir, are we on track for completing 20 parks and the revenue and whatever bottom line targets we have given for this financial year?
So, I feel reasonably confident, though this time rains have been a little bit dampener. So earlier, if let's say I've been saying, that's why I've been taking a range of 15 to 20 parks. Probably before we started this year, we did not anticipate this kind of a range to probably slow, some of our park construction, But, that's something which we don't control, so I have not probably been, and we've taken that in stride and we keep pushing it. So in terms of our revenue stream for your question was regarding EPC and non-EPC?
EPC and ticketing, sir, for this quarter. Out of the 31 crore, what is the split between EPC and ticketing?
EPC would be almost like 28 crores and the rest will be around 3 crores this quarter.
And you just said, sir, we are expecting similar execution next quarter, 28 crores. So I think, sir, we would be short this year for our target. Is that how it is looking, sir? Because just now,
as far as
like what EPC we are targeting in quarter 3 and 28 crores was mentioned.
No. So I don't see that we will be falling short. So first of all, we had given a target of almost 160, 175 odd crores as a overall company revenue target for this year. And I am more than confident that we should be able to do it. Geotech would probably step up in next 5 months. They should add, more numbers than what we thought that we will do this year. As far as the parks are concerned, we might be falling short on couple of parks this year because of the rains and the delays and, all those kind of things. But we feel that we'll be able to catch up. As far as the, tickets and other targets are concerned, we might be, lagging behind because the parks have not opened as expected. As I mentioned earlier that ideally Noida should have opened in September and we are in November now. It should open sometime this year. Now this kind of a delay delays our park revenue, because the capex have already been done and the revenue of ticketing, F&B and everything has to start kicking in. So, as I mentioned earlier, that FY27 is when probably gives us little more certainty in terms of the numbers, because by that time we will have a core base available of almost 15-20 parks which will run a full course of 1 year.
Thank you, sir. Just one last question from my side. Could you just tell, sir, what is the status on World Park Ahmedabad, because we had some problem? And the second part
we don't have any problem. The
there was
problem
land problem in the previous quarters.
Pardon?
There was some land allocation problem, sir.
So
in the
I
previous
think
quarters.
that land allocation issue still remains. So that's why I am not taking that into consideration as far as my booking target is concerned for the year. I mean billing target.
Just one last thing is we raised significant amount of money recently, I think a couple of months back. And so what is the status around some kind of deployment of these large amount of funds, sir?
The purpose of, taking the fundraise was two main prongs. One was, looking for some acquisitions, and the other one was for the, push towards, both working capital and all that. And I think we are reasonably positioned. We have been exploring some acquisitions opportunities, and I am hopeful that we should be able to close something within this month or two,
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to 2 per participant. The next question is from the line of Aditya Pandya from Polycab Family Office. Please proceed.
Hello. Hi, I'm audible.
Hi.
Congratulations, sir, on the good set of numbers. I just had a few set of questions. Firstly, like you mentioned just before this, you mentioned something about the acquisition going through in the coming months. So can I get some idea about what this acquisition is and what is it helping in our line of business, and how will we get more business in terms of revenue, or will either bring us some margin expansion?
What we have been looking at is acquisition which helps 2 of our businesses, not just one division of us. So we've been looking at that, how do we make outdoor more interesting and more wholesome experience, As I mentioned, in our current portfolio of 5 parks operating, 4 parks have some water bodies. Similarly, if you really look at, India has a large number of water bodies which have not been properly maintained because of various reasons, and the 2 main reasons are, one, the side amenities are not properly built, and the other is the treatment and the quality of water which probably is there. So we are looking at a technology which helps rejuvenate these water bodies, which will help, increase our, because I get, often asked by various government departments which we deal with that, we have a water body, can you develop a park around it? And when we have often visited those water bodies, we find them sinking, we find those are not well maintained, though there is a land around it which nicely be developed into a good creative theme park, So we are looking at exploring technology which can probably provide, one is the treatment solutions around the water body, and the second is about creating some package with treatment plant solutions where, these plants are getting executed. There are a lot of NGT guidelines which are coming up in larger cities that these parks which are being built by the government should deploy recycled water and it should not be taking fresh water. So it gives us an opportunity to expand our water line of the business as well, and also helps in terms of the park business. And this business will help not only add the revenue, but will also help towards our margin expansion in the coming year.
So that's wonderful. I think congratulations on that as well. Just another question. How much of our current revenue is based on O&M only?
Current O&M revenue, what would you define as a O&M, by the way?
How many parks are you managing currently with the, your ticket sales and maybe even...
Okay, so you're talking about the park O&M only, okay?
Yeah.
Right?
Okay.
Yeah, okay, because we do O&M in our water business as well. So our current revenue in terms of around almost 14-15% of our park revenue is currently the operation maintenance revenue.
Okay, and what margins are we commanding on that?
Pardon?
Margins we are commanding on the O&M revenue?
Around 30-35%. Because it's a factor of some of those fixed expenses which are already here. So I'm talking about at the net level, because you already have some, fixed manpower expenses and all while you maintain these parks.
Understood. Just a last question from my side. I think from
Sorry
the
to
earlier
interrupt,
call.
Mr. Aditya. Maybe
No,
request you to...
it's the last question. Sorry, I just leave the call again. That's all. So in the last call, you mentioned that we had some demerger planning of our geotechnical and water business. Is this discussion right now as well?
Yeah. I mean, the significant expansion which we are trying to do in the geotech and the water business will help us get a significant heft in that part of the business as well. And I feel that FY27 might be a good year to probably look at that opportunity now.
Okay. Got it. Thanks. That's it.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to answer questions from all participants in the conference, please limit your question to one per participant. The next question is from the line of Ashish Soni from Family Office. Please proceed.
So this park in Pimpri-Chinchwad, I think that is ready and still it's not inaugurated. What is happening there?
Which one, sir?
The Pimpri-Chinchwad park, World Park.
Well, we're waiting, for two things, the completion certificate and for some, signing from the either Honorable CM or Deputy CM. We should be getting the completion certificate in next 1 week's time. So that's why I was saying that hopefully by end of November we should be ready to operate.
Okay, sir. Thanks and all the best.
Thank you. The next question is from the line of Akshat Mehta from Seven Rivers Holding. Please proceed.
Hello, sir. Am I audible?
Yes, you are.
So just a couple of questions. One is I wanted to understand, what is the main reason that we've seen an elevated working capital cycle in half year?
Okay. It is, we took a conscious call that we need to have at least, a significant base of operating level parks to be built this year. So we have been pushing the construction of 15-20 parks this year. Now, typically, as you all know, that most of our projects are in, working with the government. And government, usually the payment cycle is around 90 days. So if you look in terms of how we track our internal metrics is that the aging analysis of the debtors, while the debtors look elevated, but because we have been pushing now the full steam construction of these parks, and we are collecting as well. So we have a very little, outstanding in terms of which are more than, let's say, 90 days cycle.
Okay. And so what can be expected by the end of the year? Will it come down? Will it remain the same? What is the analysis there?
I feel that probably at least this year it will not come down because I am very determined that we should have 15, 20 operating parks because that will give us a very consistent base of recurring revenue next year. Now, if I need to make these parks operational by March, I need to push execution aggressively, and so I expect, this year to be, so again, as I mentioned, while you look at our, working capital cycle, look at from an aging point of view. We are pretty good from an aging point of view. It's just that, it looks larger numbers because we are doing larger amount of business now. And we are pushing the, the number of parks to be completed by March of this year.
Thank you. The next question is from the line of Keshav from BHH Securities Private Limited. Please proceed.
Hello.
Yes, sir.
Hi, sir. Thank you so much for an excellent set of numbers. You're always delivering on whatever you said. I'll just keep my questions short. I just want to comment on one thing, one observation I've made. So this last 6 months, basically, we are in the business of parks. And parks when there's rains, people generally don't go out venture out in the parks. And we have had an extended spell of rains in North India particularly. So even in the face of adverse headwinds, we have delivered an excellent set of numbers, which is very creditable. Thank you so much for it. I would want your comment on this. How do we see the parks business panning out? And I have two questions. The first one is about current assets and trade receivables. Why are other current assets so high? What do they comprise of? And the second question is short-term loans and advances are also high. Whom have they been given to?
Sir, I will answer the question more on the, the business side of it, and Mr. Kohli can answer the other question on the financials, the CFO, sir. And I'll tell you, as far as the numbers are concerned, I feel that your point on the range are absolutely right. If you really look at our overall revenue for the park visitors last year, they are down, because of the extended rains, and probably, as you rightly said, during rains it becomes difficult for people to venture out. So that is a fact which we need to probably learn to live with and probably find out creative ways to probably address those issues So, for example, we are launching a unique initiative about people wearing raincoat and visiting the park, So you see the park while wearing raincoat, and the raincoat is given as a part of your ticket purchase. If you ever visit Niagara Falls, there is a service which is offered called Maid of the Mist, and where you wear the raincoat and you actually go under the fall and enjoy the waterfall. Similarly, we have come out with a scheme where we give out the raincoat. Unfortunately, we could not execute it this year. We expect to probably launch it with full vigor next year to bring in a unique experience there. As far as the financials are concerned, I think other current assets also will include, I believe, the FDs which the company has. I do not know exactly which Mr. Kohli can answer.
Let me answer this question. We have sufficient amount of fixed deposits lying in the bank account, plus 50 crores. On top of that, this year, in this quarter, we have done a lot of government billing for all the parks where we have done the EPC contracts. That is the reason the receivables are also high which Sunil sir has just explained that we have a 90-day, more or less 90-day receivable period. So with this, in the next quarter, we can very well see not only the increase and growth in the revenue, but also the sizable movement in the sundry debtors also. The other short-term loans and advances, there is a slight increase in the other short-term loans and advances as compared to if I look at it from last year perspective, but these are all because there are some purchases where we have to give advance. And this year, the major investment has actually gone into the Noida Jungle Trail Park. And inventories have actually come down because there is a better utilization. If we look at the current liabilities also, there is a major reduction in the trade payable because this year we have been able to avail certain discounts from certain vendors, and we have been able to make sure that they also get paid in time.
Okay.
Thank you. The next question is from the line of Krimesh Gala, an investor. Please proceed.
Hello, sir.
Yes, sir.
Most of my questions have already been answered, so thank you, sir.
Thank you.
Thank you. The next question is from the line of Shubham Agarwal from ZTech India Limited. Please proceed.
Hello. Hi. Sir, can you hear me?
Yes.
Sir, congratulations on a great set of numbers. I had a question on the company's PAT. So I think for FY26, we had guided for a PAT of around 35 to 40 crores. The current half-yearly PAT sits at around 9 crores. So do you think we can achieve the projected numbers for FY26?
We're reasonably confident.
Okay. So you're saying basically like we should be able to do around 27 to 32 crores of PAT in the second half.
Yeah.
Thank you. The next question is from the line of Dipankar from CCVIM. Please proceed.
Am I audible?
Yes, sir.
Actually, my question has already been answered.
Okay, thank you.
Thank you. The next question is from the line of Rohan, an investor. Please proceed.
Hello, am I audible?
Yes.
Yeah, thanks for the opportunity and congrats on good set of numbers. Most of my questions are been answered. I just need a big clarity on, number of parts that we have added in H1 and number of parts that we are going to add in H2 of FY26.
So, sir, in H1, we did not add any new parks as of now. As of H1, just almost at the beginning of the H2, we opened one park in Anokhi Dunya Park, and we have 3 more parks which are ready to open in the month of November. And we expect as an year we should be able to have collectively almost 15 to 20 parks operating by end of March. The parks which are at the various stages of construction.
Thank you. The next question is from the line of Ashwini, an investor. Please proceed.
Hello. Yes, can you hear me?
Yes.
Yes. Sir, I just wanted to know about our thoughts now on the fast-forward sports arenas. Like, are we doing any new development anywhere regarding that, or we don't see an exciting enough opportunity in that?
No. I find that opportunity is very interesting. We have only been working to see that we launch it wherever we have extra space available. We have the second fast-forward sports arena is coming up at Noida. We have the third one which is already being planned at a park at Ghaziabad. So we expect, that once we have learnt all the nuances of this year by opening 4 of them this year, we will have significant push, going into the next fiscal. As I see, our creative, park business is going to stand on 3 critical legs, One is a waste to art, sustainable theme park. Second would be fast forward sports arena. And the third, another leg which we are adding up is the water body parks, The parks built around water bodies and rejuvenated water bodies. I expect a significant movement in that direction as well. So we will continue to probably, launch few of them in this year and then start providing the necessary help in the next fiscal.
Thank you. This will be the last question for the day from the line of Prem Soni from CCV Investment Managers. Please proceed.
Hello.
Yes, please.
Yes, sir. The question is on the acquisition. So what is the value of the acquisition which is expected to complete in
what?
1 more month? What is the value of the acquisition deal? Deal value?
We are yet to probably, I think just wait for a few more days, I believe.
Okay. And so how the numbers look like in terms of if the acquisition gets completed in advertising, how it will reflect?
How what?
How the numbers will be reflected in FY27 if the deal gets completed?
If the what?
If the deal gets completed.
Can you rephrase your question, please? Hello.
Yeah, I'm audible?
Yeah, you are now audible, so can you rephrase your question?
So, sir, since the acquisition is going to get completed in November month, so how the numbers will look like in FY27? Like how it will help in FY27 numbers in terms of revenue, in terms of PAT margins?
For the new acquisition you are talking about? Hello? Hello?
So no response due to time constraints. That was the last question. I now hand the conference over to Ms. Sanghamitra Borgohain, Managing Director from Tech India Limited for closing comments. Over to you, ma'am.
Yeah, thank you, Steve. I would like to thank all the participants and etc. Mr. Khorawat, Mr. Kohli, Ashish, all of you. And I hope we could answer all the queries and hope for a better and good tech app. Thank you so much. Thank you
everyone.
Thank you everyone for attending the call. Thank you.
On behalf of Tech India Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you.